They told you insurance keeps you safe. But what if it's the most elegant trap ever designed? Slow, quiet, and built to look like protection. Every month you pay, not for safety, but for a promise that disappears the moment you reach for it. Because this isn't about risk, it's about control. Some policies are structured like casinos, but here, you're not the player, you're the jackpot. And the cruelest twist? Even after a lifetime of loyalty, you can still lose everything. Why would a system created to protect you profit most when you're at your lowest? Because hidden deep in the fine print, beyond the legal jargon and technical terms, is a clause. Simple, sterile, almost invisible. But once you understand what it really means, everything changes. It looks harmless. Just another line in a wall of legal jargon, buried so deep in your policy you'd never notice it. You might skim past it, assume it's standard language, harmless, meaningless. But this clause isn't protection, it's a weapon. Its name sounds sterile, technical, easy to ignore. Non-guaranteed benefits. 2 words, clean, cold, deceptively quiet. But what they unlock is chaos. Because this is the clause that gives insurers the legal right to vanish. Not when you lie, not when you stop paying, but when they decide the market conditions have changed. That's it. No explanation, no hearing, no warning. Just one internal switch, flipped in silence. And the safety net you thought you'd bought? Gone. Now imagine this. You've paid every month, on time, for 20 years. No questions, no breaks, no hesitation. A loyal customer, a model client. And then life falls apart. You lose your job, your health collapses, your partner leaves. You reach for your policy, for the protection you were promised, and all you get is a vague line in fine print saying they owe you nothing. That's when you realize this clause wasn't a footnote, it was the whole plan. And here's what almost no one tells you. Those early payments, the first few years of premiums, they don't go toward your actual coverage. Not really. In many policies, more than 90% of what you pay disappears into commissions, administrative fees, internal costs. Your protection, almost an afterthought. So if you cancel early, or if life forces your hand, you walk away empty. No coverage, no refund, no second chance. Just engineered loss. And this isn't a glitch, it's the system. Because the longer you stay, the more they profit. But your actual protection? That remains flexible, adjustable, optional for them. You thought you were buying security, but you bought a maybe. A promise that only looks solid until you test it. They've built an entire industry on illusion. Contracts wrapped in complexity. Language designed to confuse. Clauses hidden so deep they might as well be invisible. Because if people truly understood what they were signing, they'd never sign it. But most don't. Most trust. Most pay. And most only see the trap when they're already falling. Now multiply this by millions. Entire populations convinced they're covered when what they've really bought is legal ambiguity. A trillion-dollar machine running not on claims paid, but on claims denied, on exceptions, on delays, on conditions not met. And at the center of it all, that quiet little clause, the lock that makes everything else possible. Because once you file a claim, you don't get help, you get processed. You're not a person, you're a risk profile. And the clause? That's what opens the door to the next phase, the denial funnel, where the rejections aren't the exception, they're the model. So if this shook something in you, if you're already questioning what you thought was protection, hit that like button.
not just to support the channel, but to signal that you see it now. Because the next chapter takes you inside the machine. And once you see how denial is engineered, there's no unseeing it.
They don't deny your claim because you lied. They deny it because they can. Because the system wasn't built to protect you. It was built to outlast you. Once your claim reaches them, it doesn't land on the desk of someone with empathy. It enters a machine, a pipeline, a denial script, refined, tested, and automated. On paper, it's called a review, but in practice, it's containment, damage control, suppression. From the moment your file arrives, it's not evaluated for truth, it's analyzed for weakness. Algorithms scan every word, hunting for cracks. One inconsistent date, one missing form, one symptom mentioned too early, and that's enough. The denial doesn't come with anger. It comes with calm indifference, because this isn't personal, it's procedural. You're not being helped, you're being processed. And the rejection? It doesn't slam the door. It leaves it slightly open, just enough to keep you trying, because effort drains energy, and delay multiplies profit. So you call, hoping to fix it, but instead of solutions, you get carefully crafted scripts, voices trained not to resolve, but to stall. We're waiting for additional documents. Your file is under secondary review. There appears to be a minor discrepancy. Every phrase is designed to keep you in the loop just long enough to exhaust you. And while you wait, they win. You spend hours on hold, digging through paperwork, resending documents, calling back, emailing, waiting again. What you don't see is the timer running behind the scenes, the internal clock that tracks how long before you give up. Because the longer it takes, the more likely you are to fold. That's not cynical, that's the model. And if you appeal, you enter a new funnel, slower, colder, legalistic. Your case is escalated, but not to resolution, to more scripts, more departments, each one distanced from accountability, each one trained to wear you down just a little more. Then comes the bait. A settlement letter. Partial payout. Looks generous, but it's a calculation. They know your limits. They've studied your fatigue. And if you reject it, you're sent deeper toward arbitration, legal review, third-party mediators, more delays, more fees, more erosion of your will. Because here's the part they'll never say out loud. Many of the people reviewing your case aren't claims experts. They're risk auditors. Their job isn't to help, it's to measure. How likely are you to sue? How loud are you on social media? How costly would it be if you went public? Some companies even use internal scores, disruption scores, to track how much noise you're likely to make. Low score, fast denial. High score, slower denial, with better PR. Still think this is about fairness? In leaked internal memos, adjusters were rewarded for resolving claims without payment. Not because of fraud, not because the claim was invalid, but simply because you gave up. And if that sounds dystopian, listen to this. Some policies include self-extinguishing clauses. Hidden deep in legal text, they state that if you miss a single call, a single deadline, your claim resets, as if it never existed. Not denied, erased. Legal, invisible, final. That's the real trick. They don't have to say no. They just say, not yet, until you disappear. And in the end, the image remains untarnished. A company that followed procedure. A denial that wasn't personal.
a policy that did everything right. But the truth is, you weren't protected. You were filtered, profiled, processed. And if this made you look at your insurance policy differently, subscribe. Because what comes next isn't about paperwork. It's about psychology, the invisible techniques designed to keep you loyal to a system that profits when you stay silent. And once you see how they control behavior, you'll realize the next trap isn't on the contract. It's in your mind.
Loyalty feels like armor. You believe it protects you. You pay your premiums on time, you renew without reading, you stay quiet, you trust, you follow the rules. You think being a good customer earns you safety. But in the world of insurance, loyalty isn't protection. It's data. It's leverage. And worst of all, it's a weakness. Because the longer you stay silent, the more invisible you become. Loyalty doesn't make you a priority. It makes you predictable. No complaints, no resistance, no threat of cancellation. You fade into the background, a passive profit center, a low-risk number on a spreadsheet. And that's when they start optimizing you. Every year, their systems study more, not just your health or income, but your behavior. Do you open emails? Do you respond to changes? Have you ever pushed back? Every small action or inaction builds your profile. And that profile tells them something powerful: how much they can get away with. If you've never questioned a fee, they assume you never will. If you've never challenged a denial, they bet you won't start now. So when a crisis hits and you finally reach out, they don't panic. They wait. They stall. Because they've already run the numbers. They know you're not likely to fight. And if you do, they know how long you'll last. Some companies even use internal friction indexes, quiet scores that measure how reactive you are. If you've always been cooperative, your score stays low. And that means your urgency drops with it. Your claim moves slower, not because you're less deserving, but because you're less dangerous. You thought loyalty meant you'd be first in line, but you're not in a line. You're in a holding pattern because loyalty made you disappear. And when you finally start to show doubt, maybe you mention canceling or ask tough questions, they don't respond with honesty. They respond with scripts, a 10% discount, a thank you for your trust, empty gratitude engineered to keep you exactly where you are. Because you're not a customer anymore. You're a retention profile, a risk rating, a quietly optimized source of recurring revenue. And here's where it turns cruel. The longer you stay loyal, the more easily you're ignored. Because you've proven one thing: they don't have to try with you. And when your moment of crisis comes, when you finally need the protection you paid for, your case doesn't rise to the top. It sinks to the bottom. Not because you're less important, but because you're less likely to scream. In internal documents, long-time clients are labeled as quiet backlogs, cases that can be delayed with minimal legal risk. Years of loyalty used against you. They don't see your trust as a gift. They see it as permission. And when you look back, when everything crumbles and your claim vanishes, you realize the betrayal didn't come all at once. It was slow, subtle, engineered. You weren't valued. You were harvested, not protected, but profiled. In the next chapter, we expose how even your monthly premium, the number you think is based on logic, is a manipulation.
And once you see how they price your passivity, you'll understand why silence is their favorite signal.
You think your premium is the price of protection, a number grounded in logic, your age, your car, your zip code, a monthly fee that feels like fairness. But behind that number is a system that doesn't just calculate risk, it studies you. Because your premium isn't only based on how likely you are to file a claim, it's also based on how unlikely you are to walk away. Your behavior becomes a variable. Your silence becomes a signal. Your loyalty becomes leverage. Welcome to the most invisible layer of modern insurance, behavior-based pricing, where risk is secondary and predictability is everything. At first, the numbers make sense, but then it starts. Not with a spike, not with a warning. A small increase, a tiny adjustment, nothing dramatic enough to trigger suspicion. Most people won't question a $3 hike, and that's the trap. It doesn't snap, it tightens quietly. Because they're watching. They know how often you shop for alternatives. They know when you open emails, when you renew, whether you've ever contested a fee. Each data point becomes a signal, and if those signals say you're not watching, they optimize. You thought loyalty would earn stability, but it trained the system to see you as passive, and passivity is profitable. Two clients, same risk profile, same neighborhood, same everything, but one just joined, the other's been loyal for 10 years. Guess who pays more? Not because they're riskier, but because they've been conditioned not to ask. The new customer gets the discount. The loyal one gets the markup. Because loyalty in this system isn't rewarded, it's monetized. And sometimes the increase isn't even labeled as a price hike. It's dressed as a reward, a loyalty savings adjustment, a bundled value benefit, language that sounds reassuring but means nothing. And every time you renew without asking questions, the system learns. You're still quiet, still predictable, still safe to squeeze. At some point, you're no longer seen as a person. You become a retention profile, a low-churn asset. And if that status ever shifts, if you consider leaving, they don't panic. They run scripts, small discounts, calibrated apologies, offers that sound thoughtful but are calculated to the decimal because they know the exact price of keeping you just where you are. And the worst part? You're not alone. Entire categories of customers, older, less digital, more loyal, are quietly overcharged, not for what they do, but for what they don't do. They don't question, don't compare, don't cancel. So the system tests them, pushes the price, watches the reaction. No resistance? It pushes again, and again, and again, until the premium you're paying has nothing to do with protection and everything to do with how easily you've been trained. This is what they truly extract from you. Not just money, but time, dignity, clarity. You paid your premiums, you followed the rules, you believed you were protected. But that was never the point, because what they really wanted was deeper. Every renewal, every year you stayed quiet, every form you signed without reading, they weren't just collecting revenue, they were collecting your endurance. They harvested your compliance, your patience, your belief in a system designed to outlast you. Imagine logging out of a claims portal after 5 months of back and forth, dozens of emails, hours on hold. And when the dust settles, your payout is reduced. Not because of fraud, not because of error, but because the delay made you seem cooperative. Because passivity counts against you, not for you. They didn't just take your money, they took your bandwidth. The energy you could have used to fight, to research, to protect yourself elsewhere. Instead, they rerouted it toward exhaustion, toward doubt, toward surrender. And that surrender? That's the real extraction. Because now they hold something far more valuable than cash. They hold your momentum. They own the pause between your thoughts, the split second where you wonder if it's even worth calling again. Now imagine your crisis getting worse. Health costs rising, legal bills growing, your income collapsing. Still, you call the same number. Still, you hear the same hold music. And every ring, another inch of your resolve gone. Because this isn't just financial extraction. It's psychological erosion. They don't need to push. They just let time pull you apart until you stop fighting, stop asking, stop expecting anything at all. They don't need to erase you. You'll erase yourself. And the final stage? That's when your voice becomes familiar. You're no longer a case. You're a routine. A repeating line in the call log, someone they no longer need to solve, just absorb. That's the real cost. Not the premium, not the claim, but the part of yourself that got siphoned away in the process. The fire, the foresight, the trust, all gone. Not in one blow, but drip by drip. So when people ask, what did insurance really cost you? You won't point to a number. You'll point to everything you lost along the way.
In the end, the trap didn't scream. It whispered. A fine print clause, a quiet denial, a rising premium that felt like routine. And by the time you noticed, it was already too late. You thought you were buying protection, but what you really funded was your own submission. Because the most profitable clients aren't the ones who file claims. They're the ones who never fight back. The ones who trust, obey, renew, until there's nothing left to protect. And if this made you stop, even for a second, if a part of you just realized you've been playing by rules designed to bleed you dry, you're not alone. They built the system hoping you'd never see it. But now that you have, they'd rather you disappear than ask questions. So here's what you do. Like this video. Subscribe to Bull Secrets. Because what we're exposing next isn't just buried in contracts. It's embedded in governments, algorithms, entire industries pretending to serve you. And when you see what comes after this, you'll realize insurance was just the beginning.